Okay, we have been working through this Julie's plumbing supplies problem. We've done the income statement. We've done the statement of changes in equity. And now it's time to work on the balance sheet. So let's get started with the title. As always with a balance sheet or any statement, it's going to be a three-liner. I've left sort of wider room for my balance sheet, so I'm going to sort of leave more width. We've got Julie's plumbing. Whoa. Plumbing supplies. We are preparing a balance sheet. And balance sheets just get dated, and the date here is March 31st, 2024. We're going to list assets on the left. We're going to list liabilities on the right. And when we get to it, we'll list shareholders' equity somewhere down the page on the right. So looking over to our trial balance here, we basically have all the stuff we need for assets and liabilities right here. And for shareholders' equity, it comes from the statement of changes in equity. So assets and liabilities are what we're worried about. Let's start with the most current, and the most current is cash. Ooh, current assets. And we'll begin with cash. Our company's cash was $24,000. Now, next we have receivables, and this is interesting. We hadn't done the chapter on receivables before, but now we've done it, and we have accounts receivable, and we have the account below it, allowance for doubtful accounts. This is another one of those darn contra accounts. What does it mean? It means 18,000 is how much I'm legally owed, but I've estimated that 3,000 of that 18,000 isn't coming in, so our net receivables is less than 18,000. It's 18,000 minus 3, it's 15,000. So let's put that in here. AR net, and it's 15,000, and just below at the bottom of my page, I'm going to show that calculation. I'm going to say AR minus the allowance equals my AR net, and in this case it's 18 minus 3 equals 15. Okay, so there we have the AR. We have inventory, of course, 54,000, and prepaid insurance 6,000. Prepaid insurance, and prepaid insurance is absolutely current, as is inventory. So adding this up, 60, 80, 90, 99,000, I believe, is our total. Kind of an interesting number. Total current assets. Now, in terms of long-term assets, I see equipment and I see accumulated depreciation equipment. Well, again, it's an asset with a contra asset. I'm going to go 125 minus 20 to get 105, right? Equipment net. So I'm going to have long-term assets, and under there I'll have equipment net. And oh, you know what? I didn't total in the right spot. My total, of course, goes to the left here, 99,000. My equipment net, I believe, was 125 minus 20. It's 105. And that gives us our total assets, our grand total here. 99 plus 105 is 214. That's it. We've done our total assets. Double underline there, dollar sign at the top of each column and beside the bottom line. I'm not spending tons of time explaining each step because if you're shaky about your financial statements, go back to chapter 1 and get a feel for them. This is sort of just the build onto that. Looking at liabilities, accounts payable, wages payable, unearned revenues would all be current. Bank loan payable, long term. There's no current portion noted. We'll just assume there isn't one. So accounts payable, wages payable, unearned revenues, all current. liabilities. AP, wages payable, unearned revenues. Unearned revenues might have been one we haven't seen before on a balance sheet, but of course it's, even though it says revenue, it's a liability. It's when somebody's paid you in advance for a service and you haven't delivered the service, so it's something that you owe. 15, 7, and 5. Total here is 27,000. That's our total current liabilities. On to long-term liabilities, and it's really just the one, so I'll call it a liability. If you called it liabilities, that would be fine with me. It is a bank loan payable, and the amount here is 84 grand. So the total liabilities, 27 plus 84, is $111,000. Okay, now we just have to do our equity, and our equity doesn't come from here. It comes from our statement of changes in equity. We have 1,000 of common shares, 92 of retained earnings. That's it. 1,000 of common shares, 92,000 of retained earnings. Shareholders' equity. Common shares, 1,000. Retained earnings, 92,000. This totals to 93,000. That's our total SE, our total shareholders' equity, bringing us down to our grand total, liabilities and shareholders' equity, 111 plus 93. It equals 200. Wow, is that right? 111 plus 93. I feel like it's right, but maybe not. I'm having second thoughts here. 111 plus 93. I think I'm off. 111 plus 93. 204. I'm off by 10 grand. Why am I off by 10 grand? Yeah, I'm not sure why. Oh, on the other side. 99 plus 105 is 204. Huh. What a silly mistake. It does equal 204 over here. Just shows you how to quickly fix a mistake. Put a dollar sign on top of each column, a dollar sign beside the bottom line, and there we have it, ladies and gentlemen, a balance sheet that balances. So we've done it. We've solved problem 6.4a. As always, if this video has been useful to you, if it's been helpful to you, I'd love it if you hit the thumbs up button and would consider subscribing to this channel on YouTube. All right. Hope this helped. Have a great day. Talk to you soon.